Good morning, good afternoon, and good evening, everyone. Welcome to the second day of our IAIS Global Seminar. My name is Romain Paserot, and I am the IAIS Deputy Secretary General and Head of Capital and Financial Stability. Today, we will hear from the chairs of 3 of the IAIS committees about the work they have been doing over the last 6 months and their plans for the remainder of the year. First, we will hear from Dieter Hendrickx, Chair of the Macroprudential Committee, followed by Matt Walker, Chair of the Policy Development Committee, and last but not least, we will hear from Peter Bromüller, Chair of the Implementation and Assessment Committee. Today's session is a format that we are using to increase our engagement in response to your feedback. Each committee chair will make opening remarks of 10 minutes, and then we will allow for around 15 minutes of Q&A following each presentation. Some housekeeping details for the Q&A part of the sessions. Please either send us your question in the chat. We will then read the question and ask for the floor, or ask for the floor, in which case we will upgrade you to become a speaker. Take note that it will take us a moment, approximately 15 seconds, to upgrade you as a speaker so you can speak. During that time, please stay on mute. Once you have been upgraded, we will ask you to please state your name, organization, and your question. You can then unmute yourself and turn on your camera. And with that, I would like to hand the floor to Dieter Hendrickx. Dieter, the floor is yours.
Thank you very much, Romain, and hello everyone, and good morning, good afternoon, good evening also from my side. I will try to give you an update today of the different activities of the Macroprudential Committee at IAIS. Some of our work was already discussed or highlighted yesterday during the leadership dialogue. I'm sorry, but I hope to give a bit more details on our different projects today. Now, let me start with some advertising and provide you with an update of our global monitoring exercise. We have given a flavor of a preview of outcome of this year's global monitoring exercise in our mid-year Global Insurance Market Report, or GMAR, which was published on the 26th of June. For those of you who have not read it yet, the report can be downloaded by scanning the QR code that you see here on the screen. Now, as background information, and we can move to the next slide, and as most of you know, the GME builds on data collected from around 60 of the largest international insurance groups, as well as 50 supervisors around the world. All in all, that allows us to cover more than 90% of global gross written premium, which, as I said before, make it in all a very representative exercise at global level for the insurance sector. GME outcomes are discussed at the Macroprudential and the Executive Committee at IAIS before they are reported. There is an annual reporting, for instance, to the Financial Stability Board. This process, of course, also shapes potential future work of the IAIS. In 2025, we will hit another important milestone here, as the FSB will review again its experience with the process of assessing and mitigating systemic risk based on a holistic framework. GME outcomes are also reported to participating insurers and supervisors, and aggregate findings are also discussed to the public in the year-end GMAR. Later this year, the IAIS will also publish a GMAR special topic on the potential financial stability implications of natural catastrophe protection gaps, focusing on how these gaps could, via different transmission channels, affect the financial system and broader economy, including banking, real estate, households, and government finances. I can also share again the themes which will be in focus of our 2025 GME. We have geoeconomic fragmentation and how this impacts insurers' management of assets and liabilities. We have insurers' increased investments in private credit. And last but not least, insurers' adoption of governance of artificial intelligence. Now, let me share a few preliminary findings of this year's GME data analysis. We have seen how solvency and profitability positions remained stable in 2024, underscoring again the sector's resilience. Strong operational performance and organic capital generation have continued to help offset challenges from volatile interest rates, market fluctuations, and geopolitical tensions. Also, liquidity positions have improved for many insurers due to portfolio adjustments, reinsurance transactions, and higher remittances. Though some insurers have experienced a declining liquidity position, mainly explained by increased dividend payments, share buybacks, and increased allocations to illiquid assets. Aggregate systemic risk scores, which we've highlighted here on the graph on the slide, remained stable in 2024, albeit reflecting mixed developments across the underlying indicators. We've seen declining scores driven by reduced minimum guarantees on variable products and a slight drop in derivatives-related indicators. On the other side, we've also seen increases stemming from a rise in intra-financial assets. Now let us zoom into the three different themes which I've mentioned before and which will be in our focus for the 2025 GME. Turning to the first theme, geo-economic fragmentation and how this impacts insurers' management of assets and liabilities, we see how geopolitical risk has different ways to manifest itself, spill over to macroeconomic and financial risk, and ultimately be transmitted to the financial sector in general and the insurance sector more specifically. The IMF has warned that geo-economic fragmentation in general could dampen economic growth prospects and trigger a retreat from international cooperation, threatening overall global resilience. All this points to the importance of robust risk management frameworks. We've seen measures taken by insurers and reported as part of the GME that include asset reallocations, establishing exposure limits, scenario testing, and crisis response planning, as well as sometimes we've also seen how underwriting strategies have been adjusted. IAIS will of course continue to explore the potential mechanisms through which geo-economic fragmentation may transmit risks to the insurance sector. As you can see, the specific areas of attention listed on this slide below, such as credit risk, exchange rate risk, liquidity risk, and underwriting risk. Let us move to the second theme. This second theme focuses on increased insurers' investments in private credit. The 2021 to 2024 GMARs have already provided an in-depth analysis of two key structural shifts that we've noticed in the life insurance sector: the increased allocation of capital to alternative assets and the increased use of cross-border asset-intensive reinsurers. Continue this work, the IAIS has developed a draft issues paper on these structural shifts, which I will come back to later. Now, in the 2025 GME, the IAIS will perform a specific analysis of insurance investments in private credit, a rapidly growing subsector of alternative assets with unique characteristics. Some examples of benefit and supervisory concerns associated with alternative assets in general are shown on the slide, but the idea is now to deep dive a bit more into the aspects for private credit. Next slide. Finally, theme 3, we will try to capture insurers' adoption and governance of artificial intelligence. We expect the deployment of AI to have a material impact on social and economic activities. For insurers and their consumers, AI presents both opportunities and risks, which need to be effectively managed. Recognizing this, the IAIS has increased the focus on AI, looking at issues both from a risk management perspective within the MPC, but also in supporting supervisory practices, which will be covered by my fellow committee chairs later today. The 2025 GME will zoom into insurers' adoption of governance of AI. Two dimensions which we will try to capture. First of one, insurers' own risks, the impact of AI on processes, and secondly, how AI may impact the balance sheet of an insurer. Key areas of focus will be around adoption of Gen AI, including a focus on leading use cases, the drivers for AI adoption, governance frameworks which are used for AI management, AI third-party dependencies, and service provider concentrations and potential consumer impact. Next, I will end my presentation with an update on two public consultations. The most famous one, I guess, is the recently published public consultation on the draft issue paper on structural shifts in the life insurance sector. I would once again like to thank stakeholders for the valuable contributions we have received through this public consultation. This issue paper has benefited from significant stakeholder interest, which we will try to take on board now to further refine the paper going forward. We aim to finalize the paper by the end of this year. As already highlighted, the objective of this issue paper remains to clearly spell out the issues identified, cover the benefits and the risks of the different trends and the related supervisory responses, in order to inform the future work of IAIS on this topic, which could include making potential enhancements to the IAIS supervisory material and supporting material that comes along with that. We have also launched a public consultation on the updates we envisage to make to our methodology to assess the build-up of systemic risk within individual insurers as part of our IAM monitoring in the GME. This consultation was launched on the 19th of June and remains open until the 18th of August. Again, I look forward to also receiving valuable stakeholder input on this public consultation. Important areas of the methodology that we will tackle are the way, for instance, we measure the level 3 asset indicator, trying to make it less sensitive to accounting changes. But we will focus also on other indicators, including intra-financial assets and liabilities, and we will have a look at the way we score asset liquidations. Other changes cover the selection criteria for insurers that are to be included in the insurer pool. And we also try to look at indicators that we need to change in terms of weighting under the assumption that the underlying indicator could change. We will also have another look at the denominators we use. All this will result in an updated methodology, which we hope to publish as part of an updated GME document, which is expected by the end of this year. With that, Romain, I can stop here, and I'd be happy to answer any questions there may be. Thank you.
Yes, thank you very much, Dieter. Thank you for this presentation. So now it's the time for the Q&A session. So as I mentioned, please send us your question via the chat, or let us know that you would like the floor. You can mention that also in the chat. So I see that we have a first question. For you, Dieter. So I'm reading it. So the IAIS work on structural shifts in the life insurance sector is very topical. How is the IAIS assessing macroprudential risks arising from life insurers' growing exposure to alternative assets, such as private credit, and notably the increased interconnectedness with non-insurance financial entities?
Thank you, Romain. Not the easiest question, and I would say one where I would like to cover a few aspects. First of all, I would like to highlight that the IAIS in general, as most of you will already know, is actively monitoring risks, including the macroprudential risks arising from life insurers' growing exposure to alternative assets. And often this is also linked to their increasing interconnectedness with non-insurance financial entities and the real economy in general. Through the global monitoring exercise and insights from the issues paper, which I previously referenced, we have already tried to cover the main benefits and risks linked to this trend, with a particular focus on aspects such as valuation uncertainty, illiquidity, and hidden leverage. Aspects which have the potential to amplify vulnerabilities during periods of market stress. And also these three aspects have helped us as a supervisory community to have a better common view and understanding of this trend. Now, as already outlined in the issues paper, the structural shifts have highlighted, I think, again, how the insurance sector is linked to several key participants in the financial system and the real economy in general. Allow me to give a few examples. First of all, we've seen how alternative assets can be very important to fund vehicles for real economy borrowers, such as infrastructure projects, real estate project funding for corporates, and even consumers. We've also seen how life insurers, through their long-dated commitments with policyholders, have a direct impact in the real economy, influencing pensioners and impacting their savings. We've seen how life reinsurers, on the other hand, through asset-intensive reinsurance transactions, provide important commitments to a number of insurers across the globe, increasing also the links within the insurance sector. And last but not least, I think both life insurers and reinsurers have shown an increasingly connected way of being connected to different financial market participants like banks and alternative asset managers, either as providers of finance, for instance, or through distribution of risks and investments. Now, as a consequence, we need to be aware that potential disruptions in the life insurance or reinsurance sector could be transmitted to the financial system and the real economy in general. Potential systemic risk implications from all of this, particularly from the interconnectedness with other entities in the financial system, like private equity players and/or asset management managers, have been an important focus of, for instance, our issues paper due to the potential for contagion risks. Stresses in the alternative asset markets or in the life insurance sector could as such be transmitted to the real economy and financial system, and we need to understand the way this could happen, for instance, under which scenarios, and what this materiality is to be able to set up an adequate supervisory response in case we would need to react as supervisors. The draft issues paper outlines 3 key risks from a macroprudential perspective. We have looked at what could happen in case insurers would be forced to liquidate their assets in times of stress. We have considered a scenario where there would be a rapid pullback of insurers from key lending markets due to defaults and downgrades. And last but not least, we've also looked at the impact of financial market disruption from a mass recapture of asset-intensive reinsurance transactions by one or different insurers. Now, I want to stress that so far we have concluded that due to the limited size of the current exposure to alternative assets and asset-intensive reinsurance, the risk to global financial stability remain limited. But that doesn't mean we do not need to understand potential dynamics and impacts as supervisors. We have seen, by the way, how stress testing, improved data collections, and cross-border supervisory cooperation are key to help us address the challenges. Now, on private credit more specifically, as previously highlighted, it is and will be a specific theme in focus of this year's IAIS collective discussion and GME, and that fits, of course, our broader focus on several types of alternative assets. Our analysis will be based on the data that we collect through the GME, and the upcoming period of the feedback loop, both with group-wide supervisors, but also with individual insurers over the period July-August, will be important here. Our GME findings will, by the way, also be reported to the Financial Stability Board, ensuring global coordination in addressing these risks. Now, looking ahead, I can end with highlighting that the IAIS will publish its 2025 GMAR and the final version of the issue paper later this year. And I hope all this will serve as the basis for informing the next steps in terms of supervisory and regulatory responses as a reaction to these evolving risks. I'll stop here, Romain. I hope there was a comprehensive answer.
That was definitely a comprehensive answer. Thank you very much, Dieter, for that. Let me check if there are any other question on the chat or anyone willing to take the floor. This is really your opportunity to ask a question to Dieter on these very important topics. I don't see anyone. Don't be shy. All right. There doesn't seem to be any more question for you, Dieter. But it's not completely over, because you will be back tomorrow for the panel on the key risk in the global insurance sector. So you will have also the opportunity with your panelists to address some of the issues that we have discussed today. So thank you very much for your presentation, Dieter.